all the time. I think he is a wonderful resource for ourselves as mediators, trying to help clients navigate through the transition from owning a home together to owning it maybe solely or selling it and getting a new mortgage. So a very warm welcome to you, John. Over to you. And if you have any questions, you can pop them in the chat, and look forward to an interesting interactive hour with you as always.
Thanks for the introduction, kind words, Mary Ann P. For those of you that don't know me, I'm John Panagakos. I'm a mortgage agent in Ontario. Our office is it's in the heart of the city. So we're at York Mills and Leslie, but virtually we could do a mortgage anywhere. We, believe it or not, we rarely meet clients, especially now like Zoom and all this other technology. Our reach is way further than it's ever been before, which is really nice. And if anyone has questions, like ask questions or type questions into the chat as we move forward. I find that creating a dialogue is really important. There's no, just like in school, there's no stupid question, right? It's all learning. And if you're hesitating, that means you should be asking that question, because we're here to help. We're not here to judge. We're just really here to inform and create a deeper conversation. So here are my coordinates. Like if you're on social media, honestly, follow me on LinkedIn or Instagram. We do posts 3 times a week, I think. And then on Fridays, there's always some sort of informative video, anywhere from about 50 seconds all the way up to about 4 minutes. When it gets up to about 4 minutes, it's usually like an in-depth case study. And we really try and tackle every possible detail for that case study, and that's why it's really long, but very informative. And of course, you get to hear my wonderful voice. So if you go onto our website, it's like separationmortgages.com, but then there's like a podcast section, and that's where all of our videos or our audio casts will be stored. And we point clients and lawyers and other people, mediators and such, to this area, and they love it because what may be relevant to them, even if it's not relevant to them, it creates a bigger conversation. And if it is relevant to them, then they're just more confident. They're just like, wow, like this, Mrs. Smith that he was talking about is in almost the exact same situation as me, but slightly different. And then it becomes a bigger conversation and way more confidence for people. So use it as you wish. And I hope that you enjoy what you hear. So let's celebrate. For those of you that do know me, know a couple things. One is that I love baseball. I love the Jays, but I also love community and I love giving back. So every year for the last 9, I think this might be our 10th year in September, we get backpacks from the Jays, and my kids and I fill them with school supplies, and it's really fun. And if you ever take your kids to like Walmart, it's a disaster because we have to get 100 things of everything. And then we end up filling all the backpacks in our living room. And then we get people, a representative from the charities called Kids with Incarcerated Parents, and they come to the house and they pick up all the school supplies in the bags, and the kids get them, and it's wonderful. And it's really kids in need, and we're just trying to give everyone a good start to a school year. So the only constant is change, especially in this world, and especially in the mortgage broker world. As you've probably have noticed, if you've been a mediator, or maybe you've had your own mortgage for at least the last 5 years, if not the last 10 years, you probably would have noticed that there's a lot of mortgage rule changes, and it's probably getting tougher and tougher for you to even do your own mortgage, let alone suggest to someone what to do, whether to go to your bank or friendly mortgage broker, or maybe even me. But it's becoming even more difficult, and we're finding that people need to start specializing in certain areas of mortgaging. And I've created something called Separation Mortgages, and I've been doing that for mortgaging for about 13 years, and what I call separation mortgages for about 12, 10 to 12. This is all me right here. So if you're, I'm collaboratively trained. I'm with Durham and Durham, York, and the Toronto Collaborative groups. And I focus on separation mortgages and people that have issues with tax arrears. So if you owe money to the CRA, there may or may not be a lien on your property. We'll get deeper into that. That's really what I focus on. I do that regular mortgage stuff also, but my portfolio really is 90-10. So 90% separation, divorce, tax stuff, and then about 10%, we'll call it just regular mortgages. And that's just the way my clientele has evolved. Just a little bit of a pat on the back. I'm very grateful for many people that have supported me over the last 13 years, whether it's coaches, mediators, lawyers, whoever. But especially clients. So we've won a ton of awards, but we're also nominated for Best Brokerage for 2022. The awards are tonight, so I'm not even sure if we'll win, but it's certainly going to be a great celebration. And that's all kudos to not just our supporters, but we have a wonderful team at our office, great leadership, great CEOs, all that stuff, who just want to see the team do well, but and for us to do well on behalf of our clients. So this is the type of service that we give to everyone, as I'm sure many can attest to. When to engage your mortgage broker. So potentially, the sooner you engage us, the better it is. And literally, we're going to do our very best to potentially save them tens of thousands of dollars. That's our end goal. Cash flow is king. If you take anything away from this presentation, that's really what it boils down to. Also, we're going to have a lot of what we call fun facts during this presentation. And some of it's going to be repetitive, but I'm really going to do my very best to ingrain certain things or certain information into everyone's brain so it becomes just automatic. And you'll notice that late summer or early fall 2023, we're going to have new rule changes in the mortgage world. So that's going to be even wonderful. And that means Mary Ann P is going to have to get me to do another presentation probably mid-September. So you get to see this all over again, which is wonderful. And jokes get worse, so stick around. But it all comes from a good place. And she put up a heart. Now the heart's down. So what we do for many of our clients is we will often pay for appraisals. And what we'll do is depending on where you are located in Ontario, we will recommend a few appraisers, say, who do you want to select? And the appraiser can come appraise the property. They can provide a copy to the mediator or the lawyers or whoever. And then we will reimburse the client after closing, but 2 days just via e-transfer. So it's really nice. It's just another way to make things run a lot smoother because everyone has an opinion on property values, especially when we saw a decline in property values over the last, we'll call it 1.5 to 2 years. And what we also are noticing now in certain areas that we're seeing a bit of an uptick again in property values. So it's a bit of a roller coaster ride in the housing market. So fun fact, as of April 1st, 2023, mortgage brokers need to identify themselves with two things. Either you're a level 1 or a level 2. I'm a level 2, which means I just have more options for clients to solve their problems. Level 1 is you are either a newbie, so under 3 years in the business, I believe under 3 years in the business, or you haven't passed the level 2 course. I've not passed the level 2 course. The level 2 course exam for me is in a couple of months, and I need to study. But level 2 brokers, so you'll notice on people's email signatures, they need to say level 2 and identify their brokerage and their brokerage license number. So I would work with someone who has a level, and if they don't, then maybe you should find somebody. Just my personal opinion. You want more tools in your toolbox as opposed to just a couple. Fun fact. So we notice a lot of trends in this business, and when we notice trends, what we do is we blog about them and we talk about them because If it's one person, that's one thing, but if it's many people, usually the trend is in our eyes is about three. Then we start talking about them, and then we try and figure out what's going on in the mortgage world. So my first 17 deals in 2023 were as follows. Client was told to go to their bank. Clients were delayed for several months, if not several weeks, to get a solution. Clients had to proceed. The solution with the directly going with the bank was a two-step solution. There was first a title transfer, which cost lawyer fees. And then and then clients said, okay, well, I need a mortgage rate before I can do the title transfer. But they wouldn't disclose the rate to them until they did the title transfer. And clients really felt like pigeonholed here. And they're just like, well, wait a second, like you're not telling me what my payment and basically what my cost is going to be, but you're telling me that I need to incur a cost in order to move forward. It just doesn't make any sense. So going into a store saying, hey, I want to buy that towel over there. And the shopkeeper saying, well, you need to buy the sunscreen first. And until you buy the sunscreen, I'm not going to tell you how much that towel is. It doesn't make any sense. So clients felt very frustrated. And so in every case, they needed to pay. So they needed to pay legal fees twice because they needed to pay legal fees for the title transfer. And then they needed to pay the mortgage penalty and then another lawyer fee in order to complete the transaction. And these were our first 17 deals. It was insane. And so clients really felt taken back. They were like, I was spoken down to. They didn't answer my questions. We thought this was very basic and straightforward. My person told me just to go to my bank and talk to them, and this should have been straightforward, and it wasn't. And we're talking people that earn anywhere from 75, 85,000 all the way up. We have clients who are earning well over $2 million in an annual income who are having issues. So it's just not one segment of people. It is a wide range of people who were having these issues. And because there were 17 of them, I felt that it's important to speak about this and say, hey, banks are great, but they're also limited. So, and because they're limited, maybe everyone should be looking at different avenues for themselves and for their clients to have a better experience and a better opportunity to find a solution. So why does everyone need a separation mortgage expert? Well, which banks? So the reason is, I don't think anybody on this call, or bankers for that matter, or many mortgage brokers for that matter, can tell you any of this. And what's important with this is these are the problems that clients have each and every day. So sometimes they need a mortgage with or without a signed separation agreement. There are many clients that need an approval a mortgage approval prior to signing the separation agreement, right? They want to know that they can have a mortgage in place prior to signing the separation agreement in order to sign the separation agreement with greater confidence. We can do that. Most banks, if you go direct, can't, which is really, really frustrating, right? So it becomes a horse cart scenario. Sometimes people need bridge financing. So which bank can provide bridge financing for both clients? Which banks say you both need bridge financing and you both need to go to two different banks? That's a thing. Which banks can use 100% of child and spousal support? Which banks can deduct the cost of child and spousal support from your income to enhance the application, right? If you're renting a portion of your property or you have a rental income, which banks will use 50% of the income? Which banks will use 100% of it, right? So every dollar counts. And sometimes banks will only use 30 or 50% of the child and spousal support payments. Other banks will use 100% of the child and spousal support payments to help you qualify for a mortgage. And then other banks allow for a partial buyout and then a further buyout down the road to we'll call it the ex-husband. And so, not every bank caters to every unique situation. And because I'm technically every bank, I know which bank the clients will fit in based on their unique circumstances. So we save a lot of time and frustration as we help clients move forward. Part two of this is everyone knows what like a debt ratio is, right? So there's a certain percentage of your income that can go towards housing. So some banks offer 42%, others 44, some 50, some 60, some 80, right? So it really becomes challenging because someone might not qualify at the Brown Bank because of their really strict lending policies and guidelines, but the bank literally across the street will say, yeah, we'll approve this file because our lending policies aren't as strict. And so my personal record is 168%, which is crazy to think, like 168% of your income goes to housing. Well, how can you possibly live if you're paying way more in mortgage than you are, then like you can't even eat based on those numbers. So banks have really interesting, we'll call them mortgage products. So your income is your income, but then sometimes people have net worth. And sometimes people have, you know, a $500,000 GIC or a $250,000 mutual fund or something like that. And we can use those or show those documents and certificates to the bank and say, well, look, their income is this, but they have a certain net worth, and this is how their income is made up. So the client is still going to be able to pay the mortgage, but they've set up their life and their income in a way that they pay less in taxes, but we should still be able to qualify them for a mortgage based on your unique lending policies. And these are like high net worth programs that many of the banks have, not all of them, but many of them. So it's let's look at the mortgage application not like this, but let's look at it a bit like this and figure out what we can do in order to move forward for everyone's best interest. No pun intended on that one. Fun fact: there is one or two lenders that will lend in Ontario purely based on equity of your home. So if you have 55% equity in your property, and I believe you need 620 or 650 Beacon score, which is really not hard to achieve, they will allow you to qualify for a mortgage. It's almost like a reverse mortgage without the negative stereotype. And what ends up happening is it allows for people to keep, it is a short-term solution. I'm not going to lie. It's usually about 2 or 3 year max. We like to keep it at that point, but it allows for home ownership, allows for kids to stay in the home, allows for, you know, mom or dad to keep the house, better cash flow. You don't have a mortgage payment, and you get to still stay in the house, because if you look at rent versus owning, renting in many cases is way higher than owning a property these days, and it can actually reduce your tax exposure. So a lot of people, what ends up happening is they shelter a lot of their income, and as a result, these programs are way better for them because they're like, well, I have assets growing in tax sheltered investments. I would rather just have this. So although it's not for everybody, it is for a lot of people. And this is what the presentation is going to help illustrate: is our solutions are for everybody based on their unique circumstance. So they might not fit in this bucket, but they're gonna fit in another bucket. And if they don't fit in that bucket, maybe they'll fit in the third or fourth or fifth bucket. So these are many of the solutions that we discuss and offer to our clients each and every day. So not everyone is a job letter pay stub person. There are other aspects that banks look at these days that we will get into. What else should you know? Well, we can use 100% of child and spousal support in order for people to qualify for a mortgage. We do not need a signed separation agreement in order to approve someone for mortgage financing. You can prepay. Sometimes we've been in a position where people can't qualify for a mortgage, and because of their child and spousal support obligations, but they want to maintain home ownership. So we've been in a position where we were able to prepay the child and spouse support payments for a year or 2 years or however long. And there was enough equity in the home, and they were able to do that. And it was their choice. It was a solution that we offered, and they talked to their accountants and they said, well, this is great. This is a wonderful opportunity. And it increased their cash flow because they were able to focus on the mortgage, and they didn't have an obligation to their ex for a period of time. And the ex was happy because the ex got a lump sum. They're like, this is great. So just something that, just certain tools and conversations that allow people to move forward with what they want to do. Fun fact: bridge financing requires all homeowners' signatures. So for those of you that write separation agreements, just a heads up, if me and Mary Ann P own a house together, regardless of our status, married, separated, brothers, sisters, cousins, whatever, and we've decided to part ways and we both need bridge financing, or I only need bridge financing, Mary Ann P needs to sign my bridge financing approval. If Mary Ann P needs a bridge and I'm partial homeowner, I'm a homeowner, I'm listed on the title, even if it's 1% or 0.0001%, she still needs John's signature. So maybe you write that in the separation agreement, maybe you don't, but yes, you put up that emoji on the screen. But it is crazy because some people don't think that, and we have to have these conversations. So it's nice, you're going through some sort of transition of relationship or partnership or whatever, you kind of still need to be nice to each other at some capacity. Fun fact, we can approve a mortgage with or without a signed separation agreement. So I said some of this is going to be repetitive so everyone can understand this, but we often get people come up to us and say, I need an approval so I can keep my house or buy another property. And for me, then when I get that approval, me client or the client can then go to the mediator or lawyer or whoever and then sign the separation agreement with greater confidence. Mind explode. It is very difficult. I'm not saying it's impossible, but it is very difficult for somebody to walk into their branch, the credit union, to say, hi, getting separated, I don't have a signed separation agreement and would like a mortgage approval. That service doesn't really exist. And if it exists, it's very difficult at the branch level. So what we did, and this is why we created the service, was we literally reversed the process. It makes sense. I'm trying to separate from my ex. He's not the nicest guy, but I want to keep the house. Will someone give me an approval? And then I can take this to whoever and say, yeah, like I'm going to keep this house and here's my proof. Bam. The purple bank says I can approve this and all good. And I have greater confidence knowing that I'm going to sign this. Totally makes sense. Imagine. And this is where I would say 85, 90% of our business comes from, because there's a lot of people that don't know how to do it. It is actually quite simple, but they don't put the effort in, and it's really sad. So this is who we help. What else should you know? Very few mortgage brokers and bankers understand what I call separation mortgages. A lot of people assume things. A lot of people assume that there's going to be child or spousal support. A lot of people assume because you don't have a signed separation agreement that you can't get a mortgage. They assume many, many different things, and it is very, very frustrating. I am very solutions oriented. So I'm going to do my very best to get you and your client whatever they need from, in most cases, their own branch, even though the branch originally said no. Because we know bank policy better than the bank employees do. Bank employees are not here to poo-poo on the bank employee. They do a really, really good job. I used to be one, but they have many different things on their desk. Mortgages is one of them, but they have like 10 other things, right? It's like that lawyer who does family, real estate, criminal, whatever. Employment law has like a bunch of things that they do, and maybe they're, what was that saying? The jack of all trades, the master of none. But then there's like another part of that, but I'm just going to stop there just to prove my point. We also have access to 70 different lenders, including all the big banks. So the big six, I think most of our business goes to them. And then we have other lenders that provide other solutions to them. And then if you owe HST and CRA back tax, big banks will not refinance your property in order to pay off the mortgage. So that is a very difficult transaction to do. We're going to dive deeper into those types of scenarios. We do those all the time. They're really, really fun. And we're going to explain to you how to do them as we move forward. And pro tip, If you, your client, or whoever owes the CRA money and they have a CRA officer assigned to them, be nice to that person. That person has a lot of power. You get more bees, you get more bees with honey than you do vinegar. And it is very, very important. Fun fact, when a client is told to reach out to their bank, hold on, I gotta miss something, to be removed from the title of the mortgage and they want a better rate, what really happens? So quite often, hey, my lawyer told me, or someone told me to go to my branch and they will just deal with this. So ask your clients, maybe, what was that process like? Like what happened? Like what's going on? This is what happens. So the banks will say, you got to do this in a two-step process. Not the most fun thing. Adds double the amount of real estate lawyer fees. So to be removed, you need a real estate lawyer. And then in order to refinance to get a better rate, you also need a real estate lawyer. Real estate lawyer started about $1,250, give or take. So times two is $2,500 right off the top. Not cheap. And then banks in most cases will not provide a client a rate or a solution until the X is removed from title. So we talked about this. I really want a mortgage and I really want to know what my mortgage rate is going to be once my X is removed from title. Nope, won't do that. Those were our first 17 deals in 2022. 2023, pardon me. So from like Jan 1 to Family Day weekend. That's what, 6-7 weeks, 17 deals, all this scenario right here. Crazy. And then we have seen this process at the branch level take over 65 days. We met a lady in, I want to say mid to late. Yeah, it was like late November. She was our client who was making about $2 million a year. And then she was frustrated. There's 18 people on that email thread. I literally called the bank and said, hey, bank, if you do it this way, you retain the client. Let's do what's best for Mrs. Smith. She really wants to do business with you, but you're making it very, very difficult. I made that courtesy call, even though I wasn't going to make any money. I didn't care. I just wanted to do what's best for this lady. And then they're like, can't do it. I said, okay, Mrs. Smith, do you want to do business with us? She's like, yeah, 2 weeks. Crazy. She's like, this is insane. They had a business relationship with this person for like 18 years. Nuts. Fun fact. Well, I need to move something. Client should reach out to the mortgage broker that can provide all information they need and provide the solution in one step. How would clients benefit? Imagine going to a person that can do everything and consolidate the process in one step. Well, let's think about this. They'll have one real estate lawyer fee. Crazy. Brokers can shop around on their behalf and provide the best solution, including rate, payment options, and terms. Rates are great. Low rates are awesome. Terms, more important, because a lot of people are like, oh, I want the lowest rate. Sure, we get you a low rate at 25-year amortization. Wonderful. You could get a slightly higher rate at a 30-year amortization. And the difference is the 25-year amortization offers a higher payment, but a 30-year amortization offers a lower payment. Which one's better for you, Mrs. Smith or Mr. Smith? They often choose the 30-year AM because they want better cash flow. Weird. Clients receive transparent solutions from us. We just tell them everything up front. You're like, do you want to move forward? Yes, no. We press submit. A few days later, we have an approval for them to sign electronically. And this process will reduce their mortgage penalties. Wonderful. So savings across the board for everybody. I think there might be a couple of questions in the chat, but I'm not sure they're Marianne P.
I think it was just us that somebody was talking about, are you going to give us a heads up of the changes that are coming, or do we have to wait for you to come back? And I said, we have to just wait to the end to see if you've told us any of them. So
fair enough. You'll probably have to wait for me to come back because they're just proposed changes at this point that haven't been legislated through. I wish I had a crystal ball, because if I did, the numbers that I play twice a week would just like I wouldn't be here, and I would just like have a printing press of money in my kitchen.
True. Me too. Yeah, no, you're good to go. You're good to go. That's my question.
A couple more.
Hang on. Sorry. Somebody, a late entry. Daniel has a question. Daniel, I think you could unmute yourself. We're under 25.
Hi, how are you doing, Charles?
Hey, how are you?
Marianne, how are you doing? Yeah, sorry I came a little late. I went to do something. I said, Gigi, I want to come back. I want to listen to you. So I have a couple of questions. One is, I would say 50% of the people are calling me for the divorce or separation agreement. First thing is the bank told me I need the separation agreement. I said, well, that's not really true. Why don't you go to your bank and why don't you ask them, if you had the separation agreement, will I be approved? Because that's easy for them to say, get the separation agreement, you will pay me money, I will be happy, but then you may not qualify anyways. And they have a problem with it because that banks, like you just said, no, don't talk to me without the separation agreement, which is good for my business. But to be honest, it's, and I'm an honest guy. I said, try to see if they can give you something that after that you will get approved or not. But what may happen lately to me is that some of the clients, we figured out one way because they had a rate that is, let's say, 2%. And now they're going to the 4 or 5%. So what I'm doing lately, which is complicated, is trying to see if they keep the house together even though they are separating. And I guess it's quite messy for you, right? To do it after the fact.
Yeah, well, you can do it after the fact, but so a couple things there. So yeah, it's really challenging for people to go direct because the manual of the bank says need this, but there's a difference between how they're trained and what their policy actually is. And most people just don't know what the actual policy at that bank is. And maybe they're going to a bank where they actually need a signed separation agreement in advance. I'll just take it to a bank that doesn't need that to provide the solution. Yeah. And I also recognize that, yeah, if you had a 5-year fix from like 3 years ago, you're at 2% or less than 2%. Who wants to give up that? Nobody.
Exactly.
So here's the other good news. You don't need to go from a 2% rate or a 1.5% rate to a 6% rate or a 5% rate. We're advising all clients right now to not to have a 5-year fixed because rates are slowly trickling down. Now, 2 sets of rates. Fixed rates and variable rates. Variable rates are dictated by Bank of Canada and really like inflation. Those aren't going to move. They haven't moved in 2 meetings. There's the third one, I think, is June 7th. Unlikely for them to move, and eventually they're going to come down. We're just not sure when. Fixed rates are slowly coming down, and as a result, we're advising people on a 2 or 3 year fixed term because that's where we call the smart money is, or the better rates are, and better terms are for that matter. And so we might be able to blend the 2% rate with the new rate to get a rate closer into the middle somewhere. So it really just depends, but you actually just need a mortgage broker or someone that you know that can assist you and your client. So if you don't have a mortgage broker in your community or anyone that you know, I advise this to everybody. Everyone needs a mortgage broker. Everyone needs a good lawyer. Everyone needs to know a priest, a rabbi, whatever. Everyone needs to know their school principal.
And a mediator.
Principal. Everyone needs somebody that I can call up and say, hey, I got a question, and that can answer problems or answer the questions to the problems that you or your clients have. If you don't have that, then you don't actually have a partnership with a mortgage professional or a financial planner for that matter, or whoever that can assist you. And it's always good to have that, and just introduce them to the client, and then be able to move forward. And I think, although it's great for your business for certain things, it's probably even better for everybody's business to say, hey, here's somebody, find that solution, and then you can get new clients coming in the door, right? Versus just the existing clients spinning their wheels. And that's the lawyers that I work with and mediators that I work with have found that to be a lot better in terms of an overall experience for people.
Yeah, okay.
Right. So, and then moving back to the slide, and I hope I answered all your questions. And you can always reach out to me, whether it's telephone call or email, and I will get back to you. I'm somebody that really picks up their phone. And so what we really do, although we have 70 lenders, what we really do is we narrow the focus to about 3 or 4, and we say, look, here are your options. Here's option 1, 2, and 3. Let's figure out what's best for you, and here are the terms. Most importantly, the terms. And then what we also do is oftentimes clients are in the middle of a settlement conference or mediation, and they need a quick answer. the iron is hot. We're about to strike a deal, and we're not sure if Mrs. Smith or Mr. Smith can actually afford this property. They might not be approved, right? This is crazy, and we've done all this work, and we really just want to move forward because no one wants to come back to this table. Friday, 2:00, for whatever reason, is like settlement conference hour, and my phone rings off the hook. And literally, I flip open my laptop, we do a mock application using all the data that they're giving me, and I will just say yes or no on the spot. There's a few conditions in there. We need to verify a couple of things, but if you're telling me that your income and all this stuff looks like this, you're good to go. And we've been very successful in that. We just want to be in a position where we're able to help, just like everyone else on this call is. Mediators are there to help, lawyers are there to help, and we just want to provide solutions for our clients. And I think that's what everyone's is intending to do, especially if you're collaboratively trained or a mediator and all that stuff. Like, that's really what people want to do. They want to help their clients, but sometimes people just don't know how to help them in certain aspects of their job, right? Like, no one here is a mortgage broker, right? But you need a mortgage broker. Like, I'm not a lawyer, but I need lawyers, right? So I don't give legal advice, but I know who I can point clients to and say, hey, talk to this person because I know they're really good and reasonable. Great. Mediators and lawyers should be like, hey, I'm not a mortgage broker, but I know somebody, right? If we all stay in our lanes, like, it just becomes very, very, really, really good and really, really fruitful for everybody. And then the last point is, like, I'm not going to lie, like, I'm pretty awesome at what I do, right? Like, it's pretty good. No, Marianne, we're not laughing. You kind of see giggle there. No, lame, no.
No, totally. It is. I wanted to jump in and say, like, John is one of those people who answers his phone, and it is, you can call during a meeting, you can get answers, and it really is a valuable resource to solve it. When you get to an impasse and you're like, wow, what's going to happen? It is one of the things that can really help. And John has helped a lot of my clients with these, like, really neat creative solutions, like using family support over child support, over spousal support, and sort of the different types of support, different things that are all within the legal norms and realms of possibility, but also help them qualify for that mortgage, which helps them live their lives and be happy. And with the housing prices in the GTA, it's we need people like John on our side. So for sure, absolutely, 100%.
Yeah, thanks. And also keep in mind, like, this is mortgages, right? Like, this isn't rocket science. So when someone calls me, right, it's not that stiff, hello, how can I help you? It's never going to happen. Fill out this form, right? It's not that stiff person that we often see on the other side of a desk. And people hate that. So people call, like, hey, how are you? Happy Wednesday. How was your day? And people are like, wow, right? Like, let's have an inviting conversation, right? Let's generally know how you're doing. People are like, wow, this is great. And then naturally just become a little bit more comfortable. Let's talk about this. No judgment. Okay, what's going on? All right, you might not be able to afford. Okay, let's explore that. Let's explore, can you, and maybe you can't. Okay, and if you can't, well, maybe renting is the best option. But if you can afford, let's explore that option. Okay, well, my mortgage is going to be about $2,500, maybe $3,000 a month. I'm kind of on the borderline. Cash flow might be tight. Okay, well, let's do a rent versus buy scenario. And people like to see the two different scenarios, or different scenarios for that matter, so they can, for themselves, make a decision. I have all the information from my mediator, my mortgage broker, whoever. Now I have to take a day or two or however long to think about this, because this is a big decision. But you know what? I have all the information and I feel empowered because I myself am able to make this decision and no one's making this decision for me. Wow, crazy. Huge win for people. They feel so empowered and respected when they can make the decision for themselves because they have all the relevant information. It's great. And I always tell people, the best thing to do is work with the person that you feel most comfortable with. Your gut is a very strong, is it an emotion, instinct, feeling, whatever it is? Tell people, I have a bit of a personality, right? If you can handle my glowing personality and your gut is telling you this is the professional for me, let's work together. But if the person down the street that you spoke to or some other person is a better fit, great. Use that person No issue, because it's a partnership, because the negotiations are going to go, are going to be great. And sometimes they're not going to be so great. And sometimes, child support, they may say $1,000, but maybe it might go to $950, but maybe it goes to $1,150. But you need to be able to have someone that's going to be able to provide you a solution at $950, $1,000, and $1,150. And because things change, and you need someone that's going to be able to pick up their phone and make sure the anxiety levels come down a little bit, because, oh my God, and my ex did this. All right, no problem. It's okay. Let's take a breath. What's really going on here? And people are just like, wow, that's interesting. It's how we just talk to people. And versus, you've reached my voicemail and I'm going to get back to you within 48 hours. 48 hours for a banker to call you back? Come on, right? Like, look at the world we live in. So this is a bit of what you get with us. Fun fact.
Can I interrupt? Anne has her hand up if she'd like to. Anne, can you put your camera on? Okay, good. Good, thanks.
Oh, hi there. One of the scenarios that I've been coming across lately, which I'm sure a lot of people do, is the situation where the one partner wants to buy out the other partner. And it seems like there's no way they could qualify for the mortgage, especially given the terms, I guess, that they already have. So, they got to take over that mortgage, then pay the person out. But is that something that if I was to send them to you, you might be able to help them with?
All the time. Yeah, that's a very common scenario that we do. And we're talking about that. And yeah, for sure. All the time. So yes, so we're probably a few slides away from that, but yeah, stay tuned because we're gonna do this. So fun fact, CRA back tax issue. So what really happens? So we always ask for consent to speak to the CRA officers. Client needs to say to the CRA officer or email them however they're corresponding. John Penegak is my mortgage broker. He's going to call you. I've given him your number and I give you full permission to speak to him about my file. Awesome. Check. If they don't do that, we can't help because then there's just moving parts. So what are the potential issues here? Potential issue might be a lien on a property, or there might be a threat for a lien on a property. There's a lien on the property, harder. There's a threat, we can help calm waters. You owe the CRA $1 million? Awesome. Is there any other back taxes that are owing to the CRA? Well, yeah, actually there's another 400,000. Okay, well, if we pay you the $1 million, are you going to add a re-lien to the property afterwards and for that 400 that's owing? Because it might be better for everybody involved to pay that 1.4, right? Because you don't want to take 2 steps forward and then 5 steps back. The CRA charges about 9% interest compounded daily. It's a lot of money, a lot of interest. And then some CRA officers are more reasonable than others. So being able to speak nicely to others is really something that some people need to know, because CRA officers have a lot of power. We've all traveled across the border, whether it's on a plane or in a car. Sometimes that border officer is not the nicest of people. Sometimes that CRA officer has the same personality as the border person. So how do we speak to people properly? Yeah, okay, we can do this. Let's have a dialogue. What is it that you need? Here's my contact information. I'm on probably 4 or 5 CRA files right now. One is lovely, wonderful, 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 wonderful. 2 are, and the other 2 are, they're pretty good. They're pretty good, right? So, and we're just trying to help get files off everyone's desk. These are our common scenarios. So we talked about like high net worth. So people that have a ton of money, they also have a problem and we need to find a solution. So the solution is usually for them time. And quite often they're like, yeah, I can go to my bank. Sometimes they help, not really. But you know what? I really want someone to manage this for me that I can call at whatever time, because I really want to focus on getting this mediation or this separation completed. But I also want to work because time is money. Other times, we talk about co-signers and how do you get a co-signer involved. And should a cosigner, if a cosigner needs to be on title, should the cosigner be on title for 50%, 1%, 1% of 1%? So it's really important that we protect the cosigner from the person that actually owns the property, and we protect the person that actually owns the property from the cosigner. Because we're getting along today, but we might not be getting along tomorrow. And that's really important. And it's really important that these files are structured in a way that everybody is happy and understands each other. You know, what happens if there's lots of equity in the property and not a lot of income? There's a solution for that. What happens if both people want to sell and both people want to buy? What happens there? We talked about bridge financing and how both people need to sign bridge financing approvals, right? What happens when you're dividing several properties among separating people? You need one mortgage broker or one banker to facilitate all of that everyone can agree on. Because if I'm working on a file and Mrs. Smith is going to be keeping 2 or 3 properties, and then maybe Mary Ann P, the banker down the street, who's wonderful, she's going to be working on a couple of files. There's probably not a lot of communication between the John Penegakos of the world and the Mary Ann P's of the world. And that can become very, very frustrating. And if I'm doing my work one way and she's doing her work a very different way, then guess what? At the 11th hour, boom, it's all going to blow up and it's going to suck. So we say pick one person. And if it's us, great. And if it's somebody else, wonderful, because that benefits the clients and it just helps everything move along, because then it's one person is responsible for the success and failure of those files. You have one person and a person that everyone can speak to. Other things are, fun fact, if a client has 1 or more properties, really they need one mortgage broker, right? When clients have a cottage or rental property, you know, is there a capital gains? Is there a tax issue here, right? Is there a tax issue that they need to solve? Sometimes people own maybe just one property, but they have a portion of that property that is tax deductible. And the person that is keeping the matrimonial home wants to ensure that that tax deduction is still relevant to them moving forward past separation or divorce. How many mortgage brokers are going to ask your client, is a portion of your mortgage tax deductible? I bet you if you call up 10 of them, maybe you'll get one, right? So it's really important that we structure things in a way that is consistent from its previous structure, right? Or what happens if you're selling a rental property and there's a capital gains issue, or there's a capital gains issue on a cottage or something like that, right? Most people don't know that they need to pay the CRA the funds, and we'll call that $100,000. If there's RSP contribution room in their notice of assessments, they may want to make a RSP contribution, pay themselves first, get a tax credit, which will either help offset fully or offset some of the capital gains owing. So now we're building wealth for our clients, paying the CRA or the Canadian government, I guess, whoever, maybe both, less money, and the clients are keeping more for themselves. Right? So it's really, we just need to figure out where we fit as a mortgage professional on how to best help the client. Because we never want to be in a situation where we're screwing something up. And this is why we ask very clear and pointed questions. High net worth individuals, right? Some banks need $500,000 of liquid assets and some banks just need $250,000. And what ends up happening is they will take dollar for dollar of the investment certificate. So imagine, you know, Mary Ann P has we'll just call it a GSC for just easy language, $500,000 GSC, but let's say Mary Ann only earns, I don't know, we'll just say $100,000. Let's say the $100,000 income represents $500,000 of a mortgage. Wonderful. So her income allows her to qualify for a $500,000 mortgage. Her GIC will also allow her to qualify for another $500,000 dollar for dollar. So on a $100,000 income, Mary Ann can qualify for up to $1 million of mortgage, just because there's a program in place. We call them products, but programs, products, sort of the industry lingo that we use. She can qualify for $1 million mortgage. She may not want $1 million mortgage, right? Like her cash flow just might be out the door. And we want people to be in the best cash flow position. Like, we don't want people with debt, believe it or not, although I'm like a debt guy, but we don't want people to be drowning. We actually don't. So, but maybe Marianne can reduce her income to, say, I don't know, 50 grand, pay less in taxes, but use the $500,000 GIC to qualify for a mortgage that she actually needs. So now she's paying less in tax, but she can still qualify for a mortgage. The bank just wants to see the certificate. They don't want her to cash it or anything like that. They're not going to put like a lien on the certificate or some sort of right to the certificate, anything like that. No, just want to see it. Picture in time, Marianne can qualify. Done. Now we've helped her reduce her marginal tax rate. Wonderful, right? So just little tips and things that people should do. Other people have like holding companies, right? So, you know, people have a corporation, then they'll have a holding company. The holding company invests a lot of the retained earnings within that company. As long as you have articles of incorporation, which is the AIO on the screen, we can trace it back to the client, and we can use those investments within the holdco in order for the Mariannes of the world to better qualify for a mortgage. Really interesting things. And as we dive deeper, it becomes really, really interesting. Like, this is what I'm really fun at parties, right? So this is like this is my thing. Fun fact: if the matrimonial home is sold, yeah, we talked about this, and both listed owners of the property need bridge financing, they must each proceed with different banks. So some banks will say, oh, you both need bridge financing? You need to go to the pink bank. You need to go to the dark gray bank. Awesome. So be nice to each other, because each person needs to sign each other's bridge financing stuff. Self-employed individuals have a lot more options than we think. They can qualify based on their 2 years tax T1 generals. Sometimes we can use their bank statements to qualify. Sometimes we can gross up their net income by 15%. Sometimes we can gross up their dividend income by up to 25%. The answer for everything is it depends. And that's a terrible answer, but here's the why. The why is you might have good credit. Your loan to value, meaning the amount of mortgage you need in relation to the value of the property, might be low. So it might be 40% loan to value. Bank will gross up the dividend up to 25%, but not all banks. So the less risk you are to the bank, the more friendly the bank will be to you, right? Kind of weird. The more you need from the bank, the more policy and hurdles that you will need to go through in order to get what you want from the bank. Sort of how it works. And I will say, when I first started mortgaging, someone said to me, imagine this was your money. So imagine Marianne, and I know Marianne's got like 25 million under her mattress. I know this, right? So let's say Marianne, and I'm going to pick on Daniel because Daniel, you're on my screen right now. Marianne was going to loan Daniel $1 million. She would probably want a couple of checks and balances in place too, reasonable things, right? Hey, because Marianne's a businesswoman, right? And she wants to know that the Daniels of the world can pay her back. Very simple. Okay, well, make sure you got a job. Make sure, you know, the ID that we collect says Daniel on it. Weird, right? Just like little things, right? There are hoops, but, you know, with the right representation, those hoops and hurdles become less and less that we need to jump through. How banks consider child and spousal support. So some banks need a 3 to 6 month history of support payments. Some banks will only use 30 to 50% of the support payments. Some banks will say, yeah, you know what, we'll qualify you for a mortgage, but you can only qualify for a 25-year amortization. Well, if you get a 25-year amortization, your payment is higher than that of a 30-year amortization. And what happens if the problem that we need to solve is cash flow? If we're solving cash flow, you need a 30-year amortization because your payment's going to be less. But there are other banks that will use 100% of the child support. Weird. So let's just go to those banks. Let's just use the banks that are friendly, right? Anyone that's ever been to any holiday party, Christmas, Hanukkah, whatever dinner, you never want to go to that aunt who you don't like. you want to go to that other aunt's house who you love, right? Because they're just nicer to you. So let's use these same banks that are nicer to us and our clients. And then what happens if a bank needs history of payments? Well, that doesn't work, especially if we're going through the process of separation and divorce and there's no history of payments. Well, then let's not go to those banks. Let's go to the banks that I call divorce and separation friendly. And let's get them an approval. And then the natural question is, well, those rates are just going to be higher. No, they're not. Bank A and Bank B are probably going to have the same rate, give or take. So what's more important, the solution or that the other bank, their rate is the same, or maybe it's slightly more? And what if it is? Well, do you want to keep your house or do you want to keep, fighting and all that stuff? So bank rates across the board, generally speaking, are about the same. And if they're not, then we will figure out a way. All about finding a solution. And then, what happens if there's an interim separation agreement? Right? There aren't a lot of banks that are going to approve your file if you have an interim separation agreement, but there are some. So let's just work with those people. How to engage us. I think this might be the last slide. When to engage us? Well, engage us early, and we're going to help save time. And we're great at settlement conferences. We're going to provide solutions for one or both people. There's no conflict. If I'm helping Mr. and Mrs. Smith, I will say, I'm helping both of you. I will not disclose each other's information. They know it anyway, because they've probably seen their financial disclosures on what each person makes. And we're professional, and we will call and discuss strategies. Strategy is my life. How can we make this work? Fun fact. If one person, this is what I believe her name was Anne asked. If one person is keeping the matrimonial home and wanting to buy out his or her spouse, it's best that both people use the same mortgage broker. Why? So here's a scenario that we see all the time. We're going to assume that Mrs. Smith is going to keep the matrimonial home and Mr. Smith is going to go off and buy a new property. They may or may not be talking, right? For separation and divorce. They're probably not on the best of terms, but maybe amicable. So if they use the same mortgage broker, they've increased communication. There's increased communication because Mr. Smith can talk to me. Mrs. Smith can also talk to me. I'm going to tell Mrs. Smith, hey, guess what? Your funds are coming on Friday. 3 o'clock, you'll have funds. We're going to transfer. The real estate lawyer is going to transfer them. If we use the same real estate lawyer just holds everything. Jeffrey McLaughlin, Young and Bloor, or Young and King, best real estate lawyer on the planet. Use him. He's wonderful. I will email his contact information.
Let me put it in the chat. Jeffrey McLaughlin.
Yeah. Jeffrey MC Glockland. Let's see here. Yeah, he's great. And very reasonable too. So what ends up happening is, and we can tell Mr. Smith, hey, your funds are coming on this day. You've gone and purchased a property. So now it's a race to the finish, because we need to make sure that Mr. Smith gets his funds on time and Mr. Smith does not lose his deposit and get sued. If they have two separate mortgage brokers, what happens if they're not chatting? Right? So if the communication is low, Mrs. Smith might say, well, I don't know when my funds are coming. I don't know. He didn't tell me. Most people aren't paying attention, right? Well, what do you think what do you think is going to happen in the house if Mr. Smith doesn't know when his funds are coming? Probably a lot of anxiety, maybe some yelling, maybe some screaming. What happens if there's kids around? Well, kids don't want to hear mom and dad scream and fight. The home environment is probably terrible right now anyway. That's awful. And then now we're just adding fuel to the fire. So let's reduce the anxiety at home. Let's provide a clear path for each person to achieve home ownership, and let's just play nicely in that sandbox. And this is what we do for everyone. And we will say to them, hey, if you use this real estate lawyer, he can represent you both, no conflict. There are a lot of real estate lawyers out there that say, I'm only gonna, even though there's independent legal advice on the document, I can only represent you, Mrs. Smith, and Mr. Smith needs to go somewhere else. And now we're adding just more steps and more layers into this. And it's terrible because some professionals don't pick up the telephone. They don't email back. And you're like, did you get the mortgage instructions from the bank or not? It's a simple email. And quite frankly, a lot of people don't email back. And this is why we're saying, if you want to make your life easy, use this real estate agent or real estate lawyer, pardon me. Use one mortgage broker. If you want to use more, sure, but this is what's going to happen. I've been doing this for 13 years, I think 12 exclusively to separation and divorce. I'm learning every day, but this is what I've learned in the past. I'm just trying to give everybody some value and some insight on actually what happens on the mortgage side of things. And this is my contact information. So if you have questions, I welcome them. I am honored that I'm here this afternoon, and I'm thankful for my dear friend Marianne P. for helping or saying that I could do this. It's always a pleasure. I love the OAFM. They're wonderful people. And I hope you learned something today. And I hope you have like 3 or 4 takeaways. And if you've learned nothing today, then I have failed you miserably. And please call me, and I'm happy to have a conversation and see what we can do. I do work miracles, but everything needs to be reasonable. And we will just do our very best to help people. Thank you.
Nice. Gonna